Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your daily technical analysis of foreign exchange markets.
Euro against the US dollar. I have been away for a while, attending both domestic and international technical analysis conferences, which has given me the opportunity to cast fresh eyes on these currency markets, and this is what I currently see here in Eurodollar. Most recent action saw yesterday with an indecisive spinning top, lodged underneath the upper bear channel line of the mid-July to date bear channel, currently 103.34 to 105.86, and is highlighted in bright red on my daily chart. Though this bear channel originated in July, its main effects were felt in early September when it caused a breakdown below the mid-March to mid-July bull channel, the one highlighted in dark blue on my daily chart. Targets for this original bull channel on the downside were a primary target X in the 105.95 zone and a secondary much harder to reach target X1 in the 101.35 zone. The primary target was achieved in late August, but the secondary target X1 is still open, though still looking very hard to reach, especially as the market has decided to play around with the February and March 2017 lows at 104.92 as a base. However, the upper bear channel line drops down through this support within the next 2 weeks, so something will have to give. So far today, well, capped once again by the upper bear channel line and looking indecisive right now. Cable, aka sterling against the US dollar. A bearish dark cloud cover pattern and hanging man pattern combination yesterday as the market continues to exhibit a wide-ranging indecision between the May 2020 low at 120.73 and the 50% Fibonacci line of the June 2021 to September 2022 move at 123.16. The main recent feature had been the breakdown below and out of the March to August rising wedge pattern, highlighted on my daily chart in bright red. The targets for such a pattern were a primary target X in the 124.10 zone and a much harder to reach target X1 in the 116.05 zone. The primary target was achieved in mid-September, but the secondary target looks very much out of reach, as the market has decided to hesitate between the May 2020 low at 120.73 and the 50% Fibonacci line of the June 2021 to September 2022 move at 123.16. Well, so far today, not much. Still within yesterday's range and looking indecisive right now. Euro sterling. The market is, overall, right now, caught between the overhead slowly declining long moving average at 86.95 and the twin supports below of the rising short medium moving average, currently 86.11, and the medium moving average, currently 85.98. Additionally, the declining trend line of the June to September roof pattern, currently at 85.80, is not far below, and that's highlighted in dark blue on my daily chart. I've also highlighted the slowly declining long moving average in gold, as between these two highlighted lines is where the market is currently captured. The overall bigger pattern has been the June to September roof pattern, as this pattern has the potential targets of a primary target X above in the 87.42 area and a harder to reach secondary target X1 in the 88.18 area. At the moment, the long moving average is capping any attempts higher, as can be seen by yesterday's immediate countering bullish engulfing pattern. Beyond this, we have the April 2021 high at 87.19, but then a fairly free area up to target X. It'll be interesting to see if the long moving average is really challenged in the near future. So far today, not much, still at the top end of yesterday's range. US dollar against the Indian rupee. A bullish white soldier yesterday, countering Monday's key reversal down. Overall, the market is having a rough time digesting the October 2022 high at 83.27 and the breached, but so far unbroken, mid-August to date downtrend currently at 83.24. However, the daily ranges are getting narrower and prices are still butting heads with the overhead resistances, so it may be expected to see a significant and potentially even an explosive move in the not too recent future. So far today, Another attempt higher, over the breach downtrend and up to the October 2022 high, but not really getting through it, not yet. US dollar against the Brazilian real. A very long and, well, a very long tongue and tailed, yet ultimately indecisive doji cross yesterday. The market continues to be moving within the breached, but ultimately still valid, November 2022 to date bear channel, highlighted in bright red on my daily chart. The most recent incident has been how the upper bear channel line, currently at 517.40, capped the market in early October. Meanwhile, below, we have a whole load of supports consisting of the highlighted in gold on my daily chart of the flatlining long moving average, currently 5,001. The upper trend line extension, highlighted in purple on my daily chart, of the August to September rectangle pattern, currently 498.19. The rising short medium moving average, currently 497 even, and the 50% Fibonacci line of the October 2019 to May 2020 move at 496.61. US dollar against the Mexican peso. An immediate countering bullish harami yesterday as the market rose back up and away from approaching the flatlining long moving average below, highlighted below in gold, currently at 1773.08, and moved back up to the attractor of the bright red neckline, currently 1802.78 of the July to September lopsided reverse head and shoulders bottom. So far in October, the market's managed to achieve some notable targets, especially on the top side. The primary target X1 at 1810 for the March to July descending wedge pattern, the one highlighted in bright green on my daily chart, was achieved 2 weeks ago, as was the primary target X3 at 1778.35 for the break higher out of the longer term September 2022 to October 2023 bear channel, and that's highlighted in dark blue on my daily chart. However, the harder to reach secondary target X2 for the descending wedge pattern, and also coincidentally the harder to reach secondary target for the bear channel, both at about the 1894 area, well, those are still live. I also have not placed any primary or secondary topside targets for the reverse head and shoulders bottom as yet, mainly because we are still close to the neckline, because I'd like to see target X2 either reached or rejected. So far today, well, the neckline continues to cap the market, but we have a new factor entering the frame, a possible September to date based bull channel, currently 1790.81 to 1877.44. Now, I have not highlighted this potential bull channel as yet, in part because it is still early for such a pattern, and also because of to my mind, the bullish angle of attack of this potential bull channel is actually quite acute, and I'd like to see how it develops first, or if it doesn't as well.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.